Yes, you too. Thanks for having me.
So I've got Frank Nappi here from Farmers Insurance, and this conversation is long overdue. Home insurance in California has been in the news for what, a couple years now, at least.
Yeah, it's been building.
And so what we wanted to do is have a conversation geared to home insurance, hazard insurance, specifically in Northern California, and how it can relate to those of you who are homeowners, prospective home buyers, and prospective home sellers. But before we get started with my questions, Frank, why don't you introduce yourself and tell
Yeah,
us
great.
a little bit about what you do?
Yeah, I'm Frank Nappi, Nappi Insurance Agency here in Santa Rosa, California, in Sonoma County. Beautiful Sonoma County. I've been operating here for about 10 years. We've got 4 staff, and we do home, auto, commercial, life insurance. We do a lot of home insurance, and that's definitely something we have a lot of expertise on. And I've been helping your clients for many years, and I also do your insurance. So, we check in and review and what have you. But there have been a lot of changes in the state, and therefore a lot of changes in how we cover uh, new customers or your buyers. So definitely insurance was kind of something I think a lot of people just didn't really want to think about. Just kind of get it done, at least from when you're purchasing your home. But definitely now it's a bigger issue. It's definitely more important to have that in place because it can really delay your transaction.
So let's get started with that then. If for someone who maybe saw headlines but isn't fully versed in what has happened over the last few years in California, can you just give us a brief overview of what's happened in the home insurance industry,
Sure.
particularly around here, and why, what those factors were
Yeah.
that led to it?
Yeah, we're on a journey. So it's a very dynamic situation in real time. Um, when we've had multiple catastrophic losses, there's climate change, there's inflation, there's rising costs in construction, supply issues, post pandemic. All of these
All the
things are
forest fires,
all
right?
the forest fires, yes. So all the catastrophes that we've had. Thank God we haven't had a huge earthquake or something like that, especially in a time like this where it's just things are very limited, very strict in terms of getting covered. But all of these things lead to profitability challenges for customers and companies, and then we kind of get those effects as a customer. But essentially, that's what has been the main areas of problems in the insurance industry or those areas.
Okay. And what, I don't know if you can say, but like specifically, I've read that major carriers have left the state completely. Is that
Hmm.
kind of the main impact here, is that we have less options now?
Yes. So what happens is when companies have left the state, some are gone and they're not going to return. And unfortunately, some companies are going to take longer than others as we're on this journey of profitability in this state. Farmers is financially stable. We're actually going to be pretty much back to business as usual by the end of this year. Um, so that's great news for us as a company. Um, and the things I've heard about other companies, it's actually unfortunate that they won't be able to continue business, or if they are, it's going to take them a lot longer without naming names. I can, but I'll just kind of leave that to the side. One thing I did want to
Right.
mention earlier is also Prop 103 is also Proposition 103, which was passed in the 80s, is also another big reason.
What's
Um,
that?
uh, it was a proposition. It's pretty political, but amongst the consumers, the regulators, the companies try to set rates but that proposition, if you look into it and you can learn about that, it basically limits the insurance company's ability to set the rates that they need to pay the claims that they can forecast or into the future. So that's also been another reason that another factor that have led to a
Okay.
lot of changes
Okay.
in the insurance market.
So basically, what I'm hearing is that there was a confluence of factors.
Mhm.
We had major catastrophic events all in a row,
Yeah,
plus on top of that, the effects of the inflationary period we've been through since the pandemic and increasing costs of labor and all the stuff we read about in every sector has led some of these insurance companies to either be unable to continue or choosing not to, that the costs don't that outweigh the
yeah.
benefits for them, so they're just going to be out of California.
Right. And then when you have something like Proposition 103, which can limit the company's ability to charge the rates that they need, especially if they're unprofitable and they're not able
Hmm.
to, they're just not going to do business here or be apt to do business here like a new carrier. There's new carriers that come into our state, but there just may not be as many applications to do that um, just due to these profitability issues. That's just what it is.
Okay. Okay. So then let's start with current homeowners. I know I have clients who have current valid insurance with companies that are no longer doing new policies here. And correct me if I'm wrong, but some of them are saying they're getting canceled and they have to go get new insurance when it comes up for renewal. And then
Mhm.
some of them seem to be continuing on. Have you heard that?
Yeah. So companies, what a lot of companies are doing is they're taking. Sometimes they can't afford to cover the risk anymore because they're profit challenged, and they're just non-renewing based on that. Then they'll have other reasons, which we call like non-rate actions. Maybe they're actions that companies are taking to basically lower the risk or the probability of a claim. So maybe you've gotten a letter that they want you to trim the bushes around the house or cut down the
Hmm.
trees. And those things are beneficial to both the company and the customer. They will minimize a loss or the impact of a loss. There's got to be a reason that you're being non renewed. And there's usually some type of action that you can take. So unfortunately, sometimes you'll take that action and still get non-renewed, just
Right.
maybe because of how that's being managed, whatever you did.
And that would be, I would imagine, a good time to also shop around, to see
Yeah,
what the other options are. What
yeah.
is the care plan?
If you get the non-renewal letter, don't sit on it. Definitely take action sooner than later, because there could be other facts involved with your home or the risk that need to be taken into account. And when we go to find you another carrier, we may need more time. Um, to then get your application done and that sort of thing.
Okay.
Now, the FAIR Plan is basically the insurer of last resort in the state of California.
Okay.
If there's no standard company like Farmers or who have you that's willing to cover the risk and you need fire insurance, then you go to the FAIR Plan. The FAIR Plan will only cover fire and storm claims, vandalism, and a couple other things. But that's basically the main thing that they do is your fire and your storm um, claims, and then you have what they call a wraparound from another company to fill in the gaps for liability, water, theft, medical claims. The fair plan and your wraparound from a traditional company, um, those come together as companions for that traditional home coverage that you typically find in a home insurance policy. Like if you
Oh,
called in
okay.
a normal time
Right.
and you get a traditional home policy, you'll have all of those perils, we call it, covered: fire, theft,
Right.
storm,
Right.
and
Right.
so forth. So if you
Okay.
can't get anything, you go to the fair plan, and they have their limits as well. So there are certain risks, especially if they're high value, that are not going to be able to fit be a good fit for FAIR Plan.
And those prices are generally higher than a traditional
Yeah,
insurer.
they are. Basically, is availability. We're having an issue of availability and affordability. So when carriers aren't as available, then things also become more unaffordable as well. We want more companies doing home insurance in the state, but they're not. So you can kind of see the problem here.
Yeah,
That less companies want to come in and do insurance in the state and do
right.
business in the state. So and then you have the companies that are left that are doing the insurance and they're paying more claims. They can't get the rates they need. So it becomes more unaffordable for the
Yeah.
customer.
Less competition is not necessarily good for the consumer in
Yeah.
this case. So, like, what's an example of a house or a location where they're going to be in the FAIR Plan? Is that something you're seeing in San Francisco or more rural areas?
I've never seen it in San Francisco. I'm not saying it doesn't happen, but I just haven't seen it. If you go to somewhere like Pacifica or something like that, where wind's a bigger factor, it's that those things can increase the hazard. So Pacifica, yes, you can get a lot of FAIR Plan over there. Distance to emergency services and fire stations, those are also factors. But San Francisco, I don't typically see a whole lot of FAIR Plan. The problem that San Francisco has is typically the higher value of reconstruction there, and finding companies that can meet that need to reconstruct at the value of the homes there. Companies will have certain limits that they'll go up to reconstruct the home. Right now, if you are high value and high fire, meaning now you can't find a standard company to cover you because you're high fire. Well, then you're left with the FAIR Plan, and they're very limited and how much dwelling coverage or reconstruction of your home that they're going to give you. It may not be enough. So that's really the situation that um, can be very challenging
Right.
to get covered. We
Okay.
have an option for that, but it can be limiting.
Yeah.
But we typically won't see something like that unless it's like Woodside, that area. So those kinds of areas
Yeah.
where basically, like Woodside is not, I wouldn't call it rural, but it's semi-rural.
Mhm.
But
Certainly high
again,
value.
it's further away from fire stations and access to getting
Mhm.
in there to put out and control a fire. I mean,
That makes sense. Okay.
yeah.
So, narrowing it down to the San Francisco real estate offerings, what are red flags in a home that would cause, some problems getting traditional insurance that isn't going to be outrageously expensive?
Yeah, the four main areas you really want to make sure they're up to date or not deficient are basically the roof, the electrical, the plumbing, and the heating. So making sure that you've got a breaker box on the home, that's pretty much standard now. It's probably been brought up to code. The roof should be generally updated within the last 20 to 30 years at most. Heating, central's always best. But wall heaters are fine, baseboard heaters are fine, just depending on a wood stove, which is not very common in San Francisco. So
Yeah.
that shouldn't be that much of a problem. Yeah.
What
And
about knob and tube? This comes up all the time in real estate agent conversations, a lot.
yeah, I see that.
I'm closing escrow on a house that has knob and tube, and the buyer had no issues getting insurance. But if I were to talk to 10 real estate agents, they're all going to have some nightmare story about knob and tube. So, what's the real deal here?
They need a good insurance agent to talk to.
Apparently,
That's what I'm saying. So yeah, knob and tube farmers won't cover knob and tube. It's just a rule that they have. So if it's disclosed that you have knob and tube, we would take you to another carrier that will cover that instant. It's pretty common through San Francisco and the East Bay to have some mix of knob and tube.
right.
Like I said, as long as there's a breaker box, for these other options that we have, that's okay.
Okay.
So
Because you broker, you do farmers and then you also broker.
Yes. Yeah. So we
Okay.
do broker as well. Yeah. Farmers is a great company. Like I said, we're probably in the best shape compared to any other
Hmm.
standard company out there, as evident by we'll be out of this kind of mess right now by the end of this year. But if we can't make it fit with farmers, say because it has knob and tube, then we'll take that to a company that will cover
Right.
that
Right.
case. Yeah.
Yeah. Well, at the risk of sounding too biased, because there are other good insurance companies out there for sure.
Mhm. Yeah.
Not it's not one size fits all, but the
Right.
reason that I'm with Farmers still is because, we have a property in Sonoma County as well. And I have a lot of clients up there too, as well
Mhm.
as the San Francisco real estate. And after the big Santa Rosa fires, uh, I was talking to a client of mine who is a very big investor and he owns a lot of real estate. He's also a prominent real estate attorney and in Southern California. And he had farmers on their properties in Napa.
Mhm.
And he just felt the most confidence in that. And I just sort of took his advice and was like, okay, well, then I feel good about it too. And then I
Yeah.
had a lot of conversations with you through that time to see, and we've seen how they paid out versus other
Yeah.
companies and so forth. So that's why I was choosing to have this conversation with you,
Yeah.
is that it so far have had good experience.
Yeah.
Okay, so basically, if you're a prospective home seller,
Mhm.
you want to work with your agent to make sure your real estate agent, make sure there's not going to be anything that's going to have an insurance problem for the buyer, because this probably sounds obvious, but if any buyer who's getting a loan is going to be required to have home insurance, and you want to get an escrow and then you want it to be smooth. And
Mhm.
so up front, if you see that there's going to be red flags here, there's usually stuff that can be done ahead of time,
Yeah.
or shop around or have an option available for buyers to consider to make
Yeah.
it smooth. And so from what you're saying, it's basic utilities, that the roof isn't, you're not talking about a brand new roof. You're just talking about still a serviceable roof,
Yeah.
and serviceable health and safety level
Yeah.
heating and electrical.
Yeah. Those are basically, and plumbing too. Most people are not doing whole plumbing home replacement. You don't have to do that. It's anything you're doing that can control loss, or if it's a new roof or something that you're putting on the home or in the home. All of those things definitely improve your rates and increase your likelihood of getting covered easily. If you want the easiest, breeziest insurance experience, buy new construction, because all of those areas are going to be new. There's the less likelihood of a loss. The companies know that. With that new construction, they're including gas shutoffs, valves, and water leak detection systems. I'm not sure if you're going to ask about it, but
Well, go ahead, bring it up. What do
yeah,
you?
well, if the plumbing has not been replaced in the whole home, which it typically isn't when someone calls me for a quote, you've got 45 days to install, say, a water leak detection device.
Mhm.
Probably costs you anywhere between 500 to 700, maybe $1,200 parts and labor. It has to have the shutoff valve included, and access to the Wi-Fi when you do that installation. But basically, once that device is installed, anytime there's a leak, it senses a leak going on in the house, it will shut down the main water and prevent the leak from happening. And so that prevents you from having a huge loss and property loss, your furniture and so
And
forth.
what's the name of that item again?
Well, we recommend the Flow by Moan device, but anything that is a water leak detection with shut off valve,
MOEN,
Flow by Moan. Um,
or a water
mhm.
leak detection and shut
it,
off
it
valve.
yeah, it's a water leak detection device and shut off valve. Not if the home's not new construction and the plumbing hasn't been replaced completely in the home. Pretty common. We don't find that too often.
Hmm.
You would be required to put that on within 45 days, but pretty much up until the date of renewal. You'll be given more time. So you put that on. Doesn't cost much. It's a good investment, and it will save you some money, in the end, basically, and the company. It's really a no lose for the
Yeah,
company.
that sounds like a great upgrade for many of
Yeah.
us. I mean, we don't have a lot of new construction in the city. We do have some, but it's interesting that it's a conversation I've had over the years with buyers where, on the one hand, people think that buying a fixer is a better deal. Occasionally that can be true. And I
Yeah.
think maybe it used to be more true 10 years ago
Yeah.
or more in the
Right.
city. But now, you really, even with today's interest rates on a home loan, you really got to factor in how much is it actually going to cost you to
Yeah.
do what you want to do versus financing a property where it's already been done and is in better
Hmm.
condition. And the home insurance is one of those factors.
Yeah. Yeah. In a
Yeah.
time like this, I would say it's not as easy to get covered if you're doing a ton of construction. And
I added something to my an automatic shut off
yeah.
at the street. Is that what you're talking about?
Yeah. Yeah. It goes to the main water line. That's
Yeah.
yeah, that's what
So
they
we need to
attach it
make
to.
sure that's on my policy.
Well, you have to email me. I'll check. Yeah.
Yeah. So that's a good tip for homeowners out there. Your plumber can do it. At least if I'm thinking of the right thing, it really wasn't that big of a deal to install and gave me a lot of peace of mind to do so.
Yeah. Mhm.
And then this is just sort of high level. Uh, but what are your thoughts on earthquake insurance? And I'll start it by saying that I don't advise people on what kind of insurance to get. And I have noticed very few people have earthquake
Mhm.
insurance in San Francisco. And
Mhm.
many, many, many years ago, and again, do not quote me on this, anybody. I'm not an expert in this, and you should have the level of coverage that you feel is appropriate for yourself. But many years ago, when I first got into real estate, like 20 years ago, I had an insurance agent say to me, the reason that people don't have or earthquake coverage here that much is by the time their earthquake policy would kick in, they probably had a fire. Because I get the letter every year.
I mean, if the fire is caused by the earthquake is the cause. So you would need the earthquake coverage to get to get paid on that loss. So in other words, it's not a wildfire, and that's not going to your home insurance. Your home insurance covers that kind of fire, but it's not going to cover the loss from, which in this case is fire, from an earthquake. Your homeowners is not going to cover that.
You
Does that
mean
make
if there's
sense?
an earthquake
Yeah.
and it ruptures, a gas line that leads to your Victorian home catching on fire,
Right.
that's not covered by home insurance?
It's not. Yeah, you would need earthquake coverage. See, whatever the cause of the loss is. So in this case, if it's earthquake, if you don't have earthquake coverage, then it's not it's going to be uncovered.
But what if it wasn't an earthquake, but there's a problem with the gas line and it lights on fire? Is fire not covered unless it's wildfire?
No, no, fire period is covered. But
Okay.
yeah, there's different types of fires. It's more about the cause of the fire. So if an earthquake causes that fire and you don't have earthquake insurance, then you're not covered for that fire because it was caused by the earthquake.
What if your toddler starts the fire?
What if you're what?
Toddler.
Yeah, that's covered. But by your
Don't
home
let your
insurance.
toddler start a fire,
Yeah,
everybody.
yeah,
That's it.
yeah. But by your home insurance, not your earthquake insurance. Yeah.
Right. Why does very few people seem to have it here? And should we all get it?
I
Like,
think it's just another thing to do. I think it's maybe the cost, but typically from what I've seen, earthquake can be it's not much. It's a companion to the home insurance. So whoever you have your home insurance with, the earthquake tacks on with that. And it copies the dwelling limit, we call it, in the home policy. So if you have 800,000 in dwelling in your home policy, the companion of the earthquake will also have 800,000 in
mhm.
coverage as well to cover earthquake loss. On average, let's say it is $800,000 in replacement for the home. I mean, you're probably looking at 2,000 a year in addition to the home premium. It's not too excessive. I think it's worth it if you need it. About that coverage on the earthquake, you can cover the dwelling, a little bit of personal property, and then of course your loss of use and code. But loss of use, you're going to need money to probably, if it's a temporary loss, you'll need assisted living expenses. Your earthquake policy will pay that. If you need lodging, food,
Mhm.
laundry, what have you, or something more long term, that's an important coverage right there, and something to consider. If you can't live in your home during an earthquake loss.
Right. So it sounds like something that you recommend people take a
Yeah,
look at.
it's not much. I mean, you'll get the offer in the mail and just reach out to your agent and have them get you the quote and see what it actually costs. And like I'm saying, I think you'll find it's not that
Yeah.
much. If you're on typically granite or some kind of, more solid
Bedrock.
ground, yeah,
Hmm.
you'll have less shaking or amplification, it's called, and probably less loss. But if your soil is, yeah, I mean, if you're in Foster City or something, probably a
Right.
good idea
Right.
to get
Yeah. That makes sense.
earthquake insurance.
Okay. Yeah, that's super helpful. When Frank's talking about that 800,000, that doesn't mean the market value of the home. It's
Right.
more related to the construction costs if you were
Right.
building it, because those are very different. You get the same coverage in your insurance, in
Your
your two insurances, your earthquake and then your home insurance.
your home insurance comes with a reconstruction cost. It's not
Hmm.
based on the market value. It's what it costs to rebuild your home.
Right. Right.
And that's based on the features and the facts of your property, the quality grade, and so forth. It's that first coverage called dwelling or coverage A in the policy. It's the first coverage you see. Anyway, the earthquake will match that. At a
Okay.
minimum, you could just get a policy for earthquake that just replaces dwelling, whether it's partial or total loss. It'll pay up to that dwelling limit. Be prudent to probably get the other coverages for property, loss of use,
Hmm.
ordinance, because it's not
Okay.
that much more to add it. But at a
Yeah.
minimum, get the basic, at least get the dwelling. Like I said, it's just not that excessive. It's worth the premiums.
Well, so, kind of to
I got to
summarize
say,
here.
because
Yeah.
the scientists have said, I think by 2026, we're supposed to have a big one. So it's 2024.
Right.
In the
Hearing you
next few
say,
years, I don't know.
if you're in a higher risk environmental hazard zone for earthquake, then this is definitely something that you would want to have. But don't all of us in Northern California, are we all in higher risk earthquake?
There's a lot of fault lines that run through the Bay Area. Just the land that we live in. That's just
Yep.
the
Yep.
nature here. So
Is there anything that I didn't ask you about that you would want to share as it relates to the state of insurance or advice for homeowners, home buyers, home sellers?
yeah, just like I said in the beginning, it's a journey that we're all kind of on. We don't kind of know what's going to happen, or is there going to be an earthquake tomorrow? Like, there's just so many different things. We haven't seen a time like this in our industry since the '90s, when home insurance covered earthquake, and there were such catastrophic losses and losses to the companies that now they exclude it, and that's why.
Like Northridge and Loma Prieta?
But we
Okay.
haven't seen this type of profit challenge since those times in the '90s, which was a result of the Loma Prieta and the earthquakes that they had then.
Okay.
So anyway, now when
Interesting.
you get home insurance, it excludes earthquake for that reason. It's a completely separate um, policy that you have to get coverage for. Um,
So I,
yeah.
I have a follow-up question though on kind of the overall state of things. It's not, I mentioned how I hear all the time about knob and tube. We already talked about that. But I'm also hearing from other real estate agents nightmare stories of skyrocketing premiums on houses.
Mhm.
And
Yeah.
when I sold a house, I sold a big house in Marin County, like very West County, and the insurance wasn't really that crazy. So what are these homes like? What's the demographic of this home that's all of a sudden having a $30,000 home
Yeah,
insurance bill.
it's like I said earlier, it's the high value and high risk areas for fire that are going to be the
But you're
hardest.
not really seeing that in San Francisco as much.
No, no,
So
you
I
won't.
think this is
Yeah.
important that people shop around when they're looking for insurance, because it used to be that you could just call your regular person, but we've seen so many high profile companies leave that it's really more important than ever to look around and look under the hood on the financial, safety of the company itself,
Yeah,
because that is a big thing in insurance.
yeah. Companies can't charge the rates, so they start taking these non-rate actions like controlling loss through water leak detection devices. So that's why you're seeing it, just things are a little bit tightened, a little bit more strict.
Hmm.
So we're trying, it's a journey. We're trying to figure out how do we, if we can't charge rate, what can we do to minimize loss and
Right.
save on that rate? So my advice in this time, yeah, get an earthquake policy at least for the next few years. New construction, San Francisco is okay. Anything that's probably over 2 million to rebuild the home is just going to take longer to get covered. Um,
Hmm.
is really what it is. Don't wait till the last minute. Hopefully your realtor like yourself has an insurance person that they can refer to get on
Right. You
things.
want to, as soon as you go into contract on a home, you
Yeah,
want to start looking into this. You do not want to leave this to last
yeah,
minute. But
no,
following up on
definitely.
that, logistically, currently, what's the process for the insurance company to make the offer? Do you send people to the house during escrow? Are you asking for inspection reports? Are you just asking the buyer a list of
Yeah.
structural questions? How does that work?
Yeah, it's always case by case, but typically, if it's a new purchase, what's your name? What's the address? When I look up the first thing we're looking for is it high fire risk, something like that. If it's coming from San Francisco, I pretty much know that it's not. So that kind of checks that box. That's knocked out. We don't have to worry about that. The next thing I'm looking at in San Francisco is the quality of the dwelling. So is it deficient in repairs? Does it need repairs? What is the quality grade of the dwelling that you're looking at in San Francisco? The next thing I'm looking at in San Francisco is the value.
Hmm.
So is this going to be a high value? Because if it's too high value, I'm probably not going to keep that with farmers. I'm going to go broker that with another company that it's going to be a better fit for. Um, and that will take longer than to complete and have bound coverage for a close of escrow than it would with farmers. But if I do keep it with farmers, you're still looking at about 25 days if it needs more than 2 million in dwelling. So either way, you're going to wait, depending on if I
Okay.
put you with farmers or I go to broker it out. But that tends to be kind of how I run through a San Francisco property
Okay.
is it's not high fire, the age of the dwelling, the quality grade, it's in good repair, great. What's the value like? And then based on that kind of gives me a better timeline. My suggestion is when you're searching for properties, even before, yes, work with your realtor, but have an insurance agent too, and just start sending them the things the homes you're interested in, and just say, get me an indication, at least yay or nay. This is going
Hmm.
to be good, high fire or whatever. So then that way, not to waste your time with the realtor or something, because I mean, it's just going to be more unaffordable
Right.
and more time consuming and frustrating.
That's really great advice. I mean, having a team of your trusted
Yeah,
advisors that you can go to and just make sure that before you fall in love with something, that it's not going to be
yeah,
a real problem for
yeah.
you.
It's a big disappointment. Yeah.
Yeah. Okay. Awesome.
And
Well,
again,
thank you
it's
so
not,
much.
yeah, and it's not going to be like this forever. So things will turn around eventually. With
Well,
farmers sooner than others, like I said, but eventually it'll be normal again. But it's going to take some of these companies much longer.
you're more optimistic than I am. I don't know. I think insurance is going to continue to be a factor in places like California and
Yeah,
Florida and maybe some other states, but it's good to hear that Farmers is back on track and getting close to being business as it was before.
Yeah.
I'm sure that's a relief for you as an
Mhm.
owner of an agency. And so you've been an excellent support and help for me and many clients. If folks want to reach out to you, how
Yeah.
would be the best way to do that?
Yeah. If there's a link to my
And yeah, I'll
website,
include everything.
yeah, that'll have our telephone number. It's a lot of 4s and 5s. When you see it, 707-244-4555. And then
Yeah, and you're Sonoma based, but you've mentioned
Sonoma, yeah.
this. You do. What is your geographic range?
Yeah,
Anywhere in California. Okay.
yeah, we focus mainly in the northern, so we're all
So
throughout California.
all of the Bay Area, North
Mhm.
North Bay, and then really all of California is what you're licensed to do business in.
So,
All right,
yeah.
Frank. Well, thank you for taking the time to talk about this riveting topic
Yeah, my
of
pleasure.
insurance. It's like the everything you never wanted to know about insurance, but insurance is one of those things that could end up being a total waste of money or the best money you ever spent.
Yeah,
And there's no
definitely.
way to know.
Well, you'll be in not good hands here. How do we say that? Well, we've seen a thing or two, but anyway, I'm glad I could help, and we're definitely in a good place and a good position at Farmers to help you as well when things happen.
Okay, good. Well, thanks, Frank. And I will talk to
Yeah.
you soon. I'm going to
All
go
right.
check on my leak detection
Okay.
and
Good.
I'll email you.
All right.
All
Okay.
right.
Yeah.
Take
Yeah.
care.
Email me.
Okay. Bye.
Thanks, Danielle. Bye bye.